Hello friends, I again welcome you to this session of IFOS, income from other sources. Let us quickly again run through this topic and also through the gifts and then do one example on gifts. Are you all ready? Yes sir, absolutely. So income from other sources, check. What is taxed in this head is given in section 56, that is the charging section. So dividend income, interest on securities, winning from lotteries, horse races, card games, casual incomes and gifts, all these things are specifically taxed in this head, means it cannot be taxed in any other heads. These four things will be taxed in IFOS only. Going ahead, IFOS is also a residuary head of income. Residuary head of income means incomes which couldn't be taxed in first four heads will be compulsorily taxed under the heads of IFOS. Then, what are the conditions? It should be an income, it should not be exempt, it should not be taxable under first four heads, then it will be taxed under the head IFOS. Examples: salary received by member of parliament, member of legislative assembly. There is no employer employee relation between them, hence it is taxed under the head IFOS. Interest on FD, interest on savings bank account, income from agriculture land in foreign country, because agriculture land in India, income from that is fully exempt. Then income from subletting of property, income from letting of vacant land, family pension, royalty income. All these things will be taxed under the head IFOS. Now, quickly recollecting gifts. Okay, when we talk about gifts, gifts actually are not defined in the IFOS or in the section 56. But section 56, the charging section of Income Tax Act, talks about receipts without consideration or for inadequate consideration. Okay, now received from other than employer or received from employer. You know, if received from employer, it will be considered under the head salaries. So if it is in kind, if it is in kind, it will be not taxable up to 5,000 per annum. If it is in cash, it is fully taxable. If it is received from other than employer, then what happens? If it is received from other than employer, if it is on occasion of marriage of assessee, it is not taxable. Mind you, the marriage should be of assessee, not of his son, of his brother, etc. It should be of assessee. Okay, then when I talk about any other gift received from relative is not taxable. Okay, received from non-relative, there are two possibilities. It is received in cash or it is received in kind. If it is received in cash, it is not taxable if it is up to 50,000 rupees during the year. But if it exceeds 50,000 in aggregate during the PY, it will become fully taxable. If it is gift of property, it could be movable property, it could be immovable property. If it is of movable property, there are two possibilities. It could be without consideration, it could be for inadequate consideration. Friends, if it is without consideration, it will become fully taxable if fair market value of that gift exceeds rupees 50,000. Okay, it if it is for inadequate consideration, then taxable amount will be FMV minus consideration only if that difference exceeds 50,000. Going ahead, if it is gift of immovable property received from other than relative, then what will happen? If it is received without consideration, or it could be received for inadequate consideration. If it is received without consideration, then taxable amount will be to the extent of stamp duty value if that stamp duty value is exceeding 50,000. But if it is what? If it is for inadequate consideration, what will happen? It will become, you have to just focus on this. Okay, don't do this. If it is for inadequate consideration, then taxable value will be stamp duty value minus consideration. It will be taxable only if it exceeds higher of 50,000 or 10% of consideration. Okay, then don't do this. Go ahead. Have you all understood? Then definition of relative. Who is relative? For individual, who is relative? Spouse. Okay, spouse. Second point, brother, sisters. Third point, brother, sister of spouse. Fourth point, parents, brother, sisters. But friends, parents are covered in fifth point because lineal ascendant descendant for individual is covered in fifth point. And then sixth point is lineal ascendant descendant of spouse. And seventh point is every person's spouse, meaning to say in second point there was brother sister, so brother sister's spouse, then spouse of children, spouse of, yes, brother sister spouse is there, no? Their spouse. So every one of this will form part of definition of relative. Is it 100% clear to all of you? Then what is property? Now property is defined to mean immovable property, land, building will be included. Then other things in the property are shares, securities, jewelry, archaeological collections, drawings, painting, sculptures, work of art, and bullion. So is this 100% clear to all of you? So I thought that in this session, I will give you glimpse of things that we have done in IFOS, and then we will go in detail about example of gifts. So can we go to example of gifts now? See, already solved. I have given you this PDF. So no need to sit and solve. Already solved. How many examples are set? A to I. A to I. Those many examples are set. Okay. A, B, C, D, E, F, G, H, I. 9 examples. So I hope with this 9 examples, our gift will be absolutely clear. Yes. Check. Discuss about taxability of receipts. Taxability of receipts without consideration or for inadequate consideration in following separate cases. Okay, so these 9 cases are not connected with each other. A. Mrs. X received gold jewelry from friend, but it is on occasion of her marriage. Will it be taxable? It is on occasion of her own marriage. So friends, it will not be taxable. Is it clear to you? So don't check what is the amount. Don't check whether it is property or not. Any gift on occasion from anyone. Okay, on occasion of what? On occasion of marriage is not taxable. So don't check from whom it is received. It is occasion of own marriage of assessee, then that gift is not taxable. Is it 100% clear to all of you? Yes. Next, T received a plot of land. Received a plot of land means free of cost. Its stamp duty value is 5 lakh. wife's brother. Is wife's brother relative? Is wife's brother relative? Yes, because spouses, brothers and sisters are relative. So don't check stamp duty value. Don't check whether it is property or not. But it is received from whom? Relative, and hence it is not taxable. Did you all understand? Next, A receives 10,000, 25,000, 20,000 as gift from L, M, and N respectively during the year 25-26. You can do it 25-26. Doesn't make difference. So can you tell me what happens? It is from non-relative L, M, and N. So it is from non-relative. It's not occasion of marriage. He receives these amounts as gifts. Means this is money terms. This is received in money terms. So can you take the total? 10,000 plus 25,000 plus 20,000. The total is exceeding 50,000. It is 55,000. Hence, this entire 55,000 will become taxable. Do you all agree with me on this? Next, Mrs. B receives a diamond ring worth 1,50,000 from her fiance. Friends, is fiance relative? Please tell me opinion. Is fiance relative? No, fiance is not relative because he is not yet husband. Okay, so basically he is not yet spouse, so not relative. At the time of receipt of this what diamond ring, he is not relative. So what happens? So check, diamond ring is a property and value is exceeding 50,000. So it will become fully taxable. Make sense? Next, Mr. P purchased shares. Okay, Mr. P purchased shares from his friend for 20,000. What will happen? Is it taxable or not taxable? Okay, so it is from his friend, so non-relative. It is shares means property, receipt of property for inadequate consideration. So how much is inadequate? The fair market value of these shares is 1 lakh and you have received them for 20,000. So what is the benefit? Benefit is of 80,000. So this is going to become taxable because this difference exceeds rupees 50,000. Do you agree with me? Next, D. D is gifted a plot of land at Goa by Mr. S. The stamp duty value of the land is 6 lakh. So basically immovable property received for inadequate consideration. What will happen? Immovable property received for inadequate consideration, rather it is free of cost, without consideration only, from other than relative. Check. The stamp duty value is exceeding 50,000. It will become fully taxable. Do you all agree with me on this? Next, E purchased an immovable property. So again talking about immovable property from Q means non-relative for 25 lakhs. That means he has paid consideration. But what is the stamp duty value of the property? Stamp duty value of the property is 30 lakhs. So friends, what is the benefit that E has got? E has got benefit of 5 lakh rupees. But is this 5 lakh taxable? Check. So the difference is 5 lakh. Is it exceeding 50,000 or 10% of 25 lakhs? 10% of 25 lakhs is 2,50,000. So 50,000 or 2,50,000, whichever is higher, that is 2,50,000. So 5 lakh, the difference of 5 lakh is exceeding 2.5 lakh. Therefore, the difference will become taxable. Is it clear to all of you? Yes, no? Wonderful, wonderful. And second last question, what would be answer in above case if consideration is 27 lakh 50,000 instead of 25 lakhs? Friends, 30 lakhs property, if this E is getting for 27.5 lakh, so difference is 2.5 lakh. Now, whether this 2.5 lakh will be taxable? So that's why government is kind to you. Government is saying compare this not only with 50,000 but 50,000 or 10% of 27 lakh 50,000, whichever is higher. Okay, so 50,000 or 2 lakh 75,000, whichever is higher. So basically compare it with 2 lakh 75,000. Now 2.5 lakh, that is the difference, is not exceeding what? Difference is not exceeding 2.75 lakhs. So what will happen? When the difference is not exceeding 2.75 lakhs, it is not taxable. Did you understand? And then, wonderful, very nice. Lastly, for this session, okay, Mrs. N gets an iPhone for 1,10,000. Friends, in Mrs. N's hand, is this iPhone taxable? The iPhone is of 1,10,000. It is received from her friend on occasion of her birthday. What do you think? Is it taxable or is it not taxable? Now, understand, it is not taxable. Pallaviji, why it is not taxable? Because definition of property includes what? Shares and securities, land and building, jewelry, drawings, paintings, work of art, archaeological collections. Isn't it bullion? Does definition of property include phone, wristwatch, motor car, laptop, computer? No. So even if you receive such things as gifts, then also they are not taxable irrespective of its value. Did you understand? All of you? 100%? Absolutely. So friends, thank you so much for this session. I hope that you all have followed this gifts well. Do subscribe to the channel, hit the bell icon so that you don't miss out on any of important videos like this. We will come with lot of revision videos for AY 26-27. Okay, thank you so much. Stay tuned. See you in the next session. Bye bye. Take care. Your tax mentor CA Pratik Neve signing off.